Welcome to the Times of Industry show, a great show for everyone, and I'll tell you why. We have the CEO of the world's, or at least America's, biggest bullion dealer on the call, Kenneth Lewis, and it's so beautiful because we're going to get an inside peek behind the scenes of what's happening right now in gold and silver. People are always asking, is this a bubble? Is there so much demand that this is this look like 2011? Does it look like 2016? Does it look like we're going to get the answers today. We're going to get the answers as to what's more popular right now. Gold, silver. Is it the retail people that are calling and asking for small doses of gold and silver? Are these the institutions? Is it both? All of this plus a lot of tricks as to what's the best storage places, how to make sure that the gold is real, etc., etc. If you've never bought gold or silver before, and if you have bought it but want to know everything about what's happening right now, Kenneth is with us and he's going to answer all that. Thank you very much, sir.
Hey, thanks for having me, buddy.
I don't know anybody. This is like asking Tim Cook about the next iPhone. So I think it's a great way for everyone to know exactly what's going on behind the scenes. And I love the shirt, the One Gold. We're going to talk about One Gold as well. So, let's just jump right into it. In 2020, we've seen incredible demand for precious metals. You run, like I said, the biggest bullion dealer in America. A, how's the demand been for gold and silver? B, who's the audience? Can you describe, just general statistics like age, net worth, nationality, background, etc.? What are people asking? What's important to them? And C, can you compare it to other periods like 2011 or 2016 or 2000? You've been around the business for a long time. August 6th, that's question number 4. August 6th was the high for gold, the all-time high. Has demand also diminished since then? Or is it been the same? In other words, is there a correlation between all-time high and demand? And I'll give you the floor.
All right. Well, I'm gonna go through what I can remember off the top of my head of what you asked, and then just prompt me for some of those details. Look, I mean, this is a unique time for precious metals. We are experiencing all-time highs in demand. Even the month of August, I think, was our third largest month in the history of our company. And the number one largest month was March of this year. So 2 of our 3 largest months in our history have been in 2020. So demand continues to be strong. The last couple of weeks, a little slower than we have been seeing, but still very strong compared to previous years. You talk about who the buyers are of precious metals. And the reality of it is there's a lot more buyers of precious metals today than there have been historically. I attribute that to a few things. You go out there and you look at people getting involved in investments. You look what the markets did and look how much money people have made in the markets. You're getting a lot more, I'll call it younger, more advanced analytical types who are jumping into investing. And when they start looking at the data, frankly, gold and silver don't lie. They've done very well. Historically, they've done very well. I think it's the second best performing asset class since the year 2020, or since the year 2000, excuse me. So it's been a great investment for people over the long term. And so I think you're seeing more and more investors. We look at our new customer counts, a way to kind of measure how many people are coming into the industry. We're 2x our highest year ever, the way we're trending right now. So we think there's a lot more people interested in precious metals than we've seen historically. Traditionally, precious metals, especially physical to the home, they tend to be a little on the older side. The demographic is north of 50 in age, typically a very nice household income. Apmex tends to cater to a higher net worth customer than maybe some of our competitors, mainly because we're celebrating our 20th year. We've been around a long time, our high integrity, our transparency. We've got a lot of loyalty. I mean, 85% of our business is repeat business at Apmex, and they're just investing more dollars maybe today than they were investing, say, a few years ago. So we tend to cater to a little bit higher net worth client than the others. Now, on my One Gold platform, I will tell you, in One Gold, just as a reminder for your audience, Apmex ships physical to your home, just like an Amazon does. We have a product called Citadel where we'll store product for you at Brinks. And then we finally have a third product, which is pooled ownership, where you own metal held in a tier 1 vaulting partner whether it be the Royal Canadian Mint or in the U.S. with Brinks, Loomis, or Apmex, or overseas with Brinks. And that business has a younger client where it's more digital trading, 24/7 online trading, and they're tending to be a little bit lower. Although I will tell you that net worth of those clients tend to be just as high as the net worth of our clients on the Apmex side.
Very
So
interesting.
help me on some of those other questions you had there, because I know I didn't cover them all for you.
Yeah, just very shortly, in terms of like gold and silver, what is more popular this year?
Yeah, so Apmex, like I said earlier, we cater to a little bit more higher net worth customer. We sell a higher ratio of gold to silver than the average retailer, is my expectation. So we're like a 70-30 split. 70% of our dollars are gold, 30% of our dollars are silver. I can tell you silver had a good run, though, for a period of time where they were making up maybe 40% of our demand, disproportionately higher revenue there on silver. August was a good month. July and August were good months for silver. We have seen silver slow down in the last few weeks more so than gold. I think that maybe has a little bit to do with some of the pullback that silver had on the one day that might have frankly scared a few people. But long term, silver seems to still have just as much upside as gold, and has been a really good product for us. But again, overall, it's more of a gold business for us naturally. But silver had a good run in a couple of months this year where people really hit hard. And even today, I tell you, it's very difficult for me to go procure silver right now. On our One Gold platform, we only sell metal that we own. We're having to make commitments on silver out to November right now to get ounces in that we can sell. That's how difficult it has become for me to procure metal.
That's very interesting because silver has been the best performing asset class of 2020 and of August. It had the best July ever. And within that July, it had the best, it has the best week ever in July. And its July was the best month since the Hunt brothers. So it's very interesting that there is no mania yet and that you keep selling much more gold and silver. It actually is very encouraging to know that. And have you seen any change in sentiment since the all-time highs on August 6th? So this has been a month now. Do you see a real...
Yeah, well, look, I mentioned my month of August was my third highest month in our history.
So no.
So demand stayed strong. It did slow down toward the end of August versus the beginning of August. I'll be the first to say that. But demand's still at levels right now, even like this week, demand's still at levels that are far, far higher than they were last year. They're not as high as our peak or in early August or in March, for sure, but still very healthy demand right now for precious metals as we're seeing it.
More than 2016, more than 2011?
Absolutely.
Interesting. Very interesting.
By the way, I would say there's one big difference between 2011, 15, even 13, and where we're at today.
Okay.
Metal prices are very high, as you know. And so the number of ounces that we move are not always comparable to what we were doing in, say, 13.
Got it.
Because
so you're doing more dollar volume, but not same ounces. Okay, interesting.
Right. That's what I want to make a point about. So silver ounces were moving in far larger volumes a few years ago than they're moving necessarily today. But dollar-wise, we're still selling far more dollars today.
Interesting. So if people buy more ounces, that will actually be even more problematic to get the ounces.
Well, as I always tell people have dollars to invest. They don't come in to buy ounces. They come in to invest dollars. And I do believe there are a lot more customers of precious metals today than there were a year ago, than there were 3 years ago. So we get a run if when the debt of the U.S. government was downgraded back in 2011. If that happened anytime in the next 2 or 3 years, I can only fathom how much metal we would sell because I do believe there's more people knowledgeable of gold as an option and silver and knowledgeable about the ways of owning gold and silver. And that education level, I think you'd see demand that would just skyrocket far higher than we're seeing today if we had a repeat of something like 2011.
Interesting. You mentioned the younger crowd. Are these people calling and telling your sales reps that they're trying to that they already have Bitcoin, for example, or cryptocurrencies, and now they want like gold and silver? Are these the same type of people, the younger crowd? You said digital products, etc.
Yeah, you know, look, I'll tell a little story here, and this might be good for your audience. I've got I got twin 22-year-olds, and Dad made a deal. He wants to get them into investing. I made a deal that I'll take their internship money they had made the previous year, and I'll put that into an IRA for them. And I said, but here's what I need you to do. I need you to research your investments. I need you to think about diversification. I need you to think about where to put the dollars. And naturally, you'd expect a 22-year-old tech's going to be, popular for them. Pharmaceuticals, my one son's in the pharmaceutical industry. But what I thought was really impressive was they actually bought an ETF. By the way, I'm a physical gold seller, okay, but they bought an ETF of gold mining stocks. And he's 22 years old, right? And so my point is, I think the younger crowd is becoming more knowledgeable about diversification of your portfolio. They're looking at gold and silver as a logical placement within their portfolio. They're not just going out and putting everything in the tech and thinking this run's going to continue forever. And I think that's what you're seeing more and more out there. Is it doesn't mean they own Bitcoin. Now they're owning, one gold. It just means that they're more knowledgeable and educated and understanding portfolios than, heck, when I was 22 years old, I had no clue to the level these younger kids, I think, are educated at. And I think that's making a big difference. You look at Robinhood, you look at some of these auto investing tools, it's exciting. One thing I'm real proud of as a son, we did the investment in August, and we were just talking about this yesterday. He's up $1,800 on what he's invested between his savings and what Dad did for his IRA. He's like 20%. He's up at 22 years old. I'm like, thank goodness, because I need him to see that investing for the long term is a winner. And I believe a lot of our younger crowd is starting to get that and understanding they got 40, 50 years of horizon. They need to invest when they're young.
Yeah, I literally the last 5 months, you've seen the millennials entering the world of equities, and they're going to need education and education platforms to introduce them to this world, to risk management,
Right.
everything like that. And I think that's really interesting because for the longest time, people said, no, millennials will never buy stocks. They don't, and it's that myth or that state of mind is now it's out the window.
It is completely out the window, and I think what's really, really nice for the precious metal space is we're making it a lot less complicated to get into metal than it was, say, 8-10 years ago. Look, ETFs have been great for our industry, bringing visibility. Things like GLD are good for our business only because they bring attention to precious metals. I'm not a fan of ETFs necessarily for obvious reasons, but I also think there's some risk involved with them. But the fact that they're putting metals on the forefront of people's minds, and then we offer products like a One Gold or a digital offering, or then just an Amazon shopping experience for precious metals, I do think there's more people knowledgeable today than there were 10, 15 years ago. And I think it's only going to continue. And we just got to make it easier and easier for people to procure metal when they want it, and make that experience good. Yeah.
Okay. I want to ask you, when people call and talk to your sales reps, what are the concerns that they're raising? Is anybody talking about negative rates? Like the average guy that calls, does he call about the national debt? Does he call about negative rates, debasement, political elections coming? What are some of the catalysts that you're seeing, that's interesting? Because to me, the biggest catalyst is obviously real negative rates. The correlation between the real yield on the 10-year and gold for the past 30 years, it's almost a mirror image, right? So that's important to me, but I wonder if it's the political scene or something different that's fueling the average caller.
Look, a few things. As you can imagine, typically precious metal buyers historically have been a little more on the conservative side, not trusting per se of the political system, of the financial system, and liking having their investments kind of under their control, if you will. And we're giving those type of investors even more reason to want to get in. Over $3 trillion in debt this year, first time since World War II that I believe we're going to have more debt than we have GDP. You start drilling into negative interest rates or real interest rates. You just look at the political environment and where we're at. You're giving a lot of I call it the more conservative, investors reasons to want to get into metal. No doubt about it. And what we find is, it's funny. You listen. We tend to put customers into different categories. You have the investor who's just looking for performance on his asset. Okay, great. You have the person who understands diversification and understanding how to put a portfolio together. You have the guy that's scared the government's going to come in and take all his money, and the financial systems are going to blow up. You have the guy out there that does read a lot of the papers out there and understands things like negative real interest rates and what its correlations are. So you really get a large spectrum of buyers. What we are finding, though, is, the political setup right now is very intriguing. When a Democrat is in office, we tend to do better in the precious metals business from a demand standpoint, traditionally, because the socialist type approach, the way we tend to approach free trade and just the general approach the government takes, tends to be more involved and tends to be less of a free market. And you tend to find higher net worth individuals jump into precious metals, right? So we like to we have what we call a VIP crew, and it's people who've invested over $50,000 in a lifetime. That pocket of customers explodes when you have potential of a Democrat in office or instability in our government. And I will tell you straight up, that piece of business is ballooning for us. It's exploding right now. The high net worth customers really coming in spades right now, buying significant amounts of inventory. I'm very intrigued to see how this is going to end up. I have no idea who's going to win the election, but I almost will guarantee you between now and the election, it's going to be very, very volatile, which is generally good for precious metals.
Yeah, it's very interesting because on the one side, since March, markets have been amazing. And literally, if you did nothing during the March panic, nothing, you're up, and that was a big call to make. We, with our newsletter, we literally, in the March lows, we issued a buy list of companies, and if you bought those, you'd be up. Some of them 50 and 100%. So on the flip side, you have these whales from the 60s, 70s, 80s, etc., telling you this is a huge bubble. We're all in cash. It's amazing how the markets have polarized. So, and that's obviously good for precious metals. Over time, has Apmex developed some sort of statistics or a very astute way of how people should go about buying metals for optimal returns? Is it dollar cost averaging over month to month? Is it just whenever it's slammed, get a chunk? What is like the best way that you would say, hey, this to me historically appears to be the best way to do it?
So look, we don't look at it like that, as you can imagine, because we can't predict what the markets are going to do. My view has always been, and I'm going to get into answering your question here, but my view has always been that you need diversification in your portfolio. You need to have a certain amount of ownership in metals at all times. If the markets go crazy up, your metals go down by chance, you're still going to be happy. If the markets tank and your metals do really well, you're going to be happy. There's been some interesting dynamics this year that we really hadn't seen previously, and that is there's times when the markets drop, metals are dropping as well. And the general view is that's because metals are liquid and people are taking their proceeds from metals and they're covering their margin calls, or they're making other investments at the time and freeing up that capital. That's a dynamic we really haven't seen that I know of previous to this year. But then once that initial hit comes into metals does tend to work inversely to the equities markets. They tend to work when the markets are struggling, metals do fairly well, and vice versa. So what we tell investors is it's really about portfolio diversification is really the key. You're never going to time the market. You're not going to be able to sit here and go, I know metals are going to go up, I'm going to make investments and you're going to always win. It's just not going to happen. But if you take a portfolio approach, you tend to be very happy over the long run, in our opinion. Do we see consumers buy? Metals tend to be bought on the dip. So when there's a pullback in price, you see a surge in demand traditionally. You also see if the equities markets are facing significant resistance. So Yesterday was a good day for us. And when the equities markets are down, even though metals are down, I got a double whammy. I've got equities struggling and I got a dip to buy metals. That tends to be good for our business. Those are really the key drivers, but we don't profess to know what's the best time to buy. We more like to say buying on a dip is not a bad strategy. I think anyone would agree on that, but also really just paying attention to your overall strategy. Look, you don't want to have 50% of your assets in metals. You don't want to have zero either. You need to find what works for you. I find it's funny. I just turned 50, by the way, on Wednesday.
Mazel tov.
And I find that I am more open to conservative investments today than I were 10 or 15 years ago. And so I think more about diversification today than I did a while ago. And so I'm more open to having a less volatile asset investment, even if it doesn't perform in peak times as well as maybe I would like. And I think you're seeing more of that starting to occur as well.
You know, I think I'm like the best ideal customer for you, because what I did, if every customer would do, you'd make a killing. Because what I did, and I think this is like the best way to do it, is just say, okay, what is my monthly burn rate? Cash. How much does the family unit burn? Okay, now an average depression or a very big recession is 2 years. Okay, you take 2 years of that, so 24 months worth of your expenses, and you put in precious metals. And then if you increase your lifestyle, you add more. And then on top of that, if you feel like there's a big pullback like we saw in March in silver, take an opportunity. You can then sell some of that later, and but man, 2 years worth of living expenses. If everyone on the planet had that, it would be 10 times the size.
Well, it's an interesting strategy. I will tell you, and we've been blown away by this, on our One Gold platform, where you can buy as little as $1 of gold at a time. We have what we call auto invest, where you can actually do dollar cost averaging, like you mentioned earlier too, where people could come in and say, I'm going to buy $5 of gold a day over the next year. And that interest in that product has been far exceeded our expectations. 70%, 65% of all transactions we do on One Gold are reoccurring transactions where they're dollar cost averaging. So I thought that might be something. They tend to be smaller dollar amounts, but the fact that I think some people are realizing I can't time the market, I just want exposure to metal. Yeah. I'll just put a dollar amount in every day or every week, and I'll let it run. And that's done very well for people over the last year, obviously.
Okay, I want to ask you about diversification in terms of storage. What are some of the places around the world and in the United States where people can store, and what would be the value of that as we look at the world, obviously, as it is?
Right.
Okay.
Yeah, so we offer a Citadel product, and there are many other competing products like it. And we store the metal at Brinks in Salt Lake City. I shouldn't say the location, but anyway, Salt Lake City, big city, right? But we store at a location with Brinks. And what customers get out of that is you don't have to worry about being robbed or having the inventory in your house or the metal in your house and someone getting wind of that and making it an uncomfortable experience. And I don't know about you, but if you try to store any significant dollar amount in silver, it's a little challenging to put that in your home just because it takes up a lot of space. And so you get the benefit of having it insured. You know that it's under lock and key. In our case, we actually have our top 5 accounting firm go in and audit the holdings every year, and we make that available to our customers, so you know the metal's truly there. Brinks is the best at what they do. So is Loomis. They know how to keep products secure, and they can make that information available to the consumer as well. So it's a really nice way of getting in metal where you can truly take an ownership of a particular product. That's a very important piece too. When you're doing storage, you're typically buying a product, a silver eagle, a gold eagle, a maple, whatever that might be. And you like the idea of knowing you're in maples rather than bars, or that the product you're picking you think is important. And we believe there's actually some merit to that, because when you go to liquidate your products, obviously you have to think about things like spreads and what am I going to get back when I go to sell a physical metal, because I'm not going to get paid for it on a premium basis based on what I paid for it. And so you want to pick products that have tight spreads. And if you just go out and buy bars, which is the cheapest product, you may find the spreads are much, much larger when you go back to sell it. You may be better off holding a sovereign coin or whatever it is you think is right for you. But there are locations around the world. People talk about storing your metals all over the world. We specifically focus on the U.S. location today when it comes to our Apmex product. We also do a pooled product where you can go out and say, I'm going to own a fractional ownership of a 1,000-ounce silver bar or a 400-ounce gold bar or whatever. For those who are okay with that and okay with storage, we offer locations in Switzerland with Loomis. We're at the Royal Canadian Mint up in Canada. We have locations in the U.S. So you're able to pick the location you feel most comfortable with. To me, you know, good old U.S. is probably not a bad bet, but some people are a little concerned about the U.S. government and having too much reach, and they want to store their metal in Switzerland or somewhere else, and we try to accommodate that as well.
Kenneth, one last question. How can people reach out to Apmex, and when they do, what can they expect from the person that will speak with them if they have never bought metals, and on the flip side, if they're very seasoned and they're looking for that extra edge?
Yeah, no doubt. Look, we've been around business for 20 years. We're known for service. We're known for transparency, integrity. Our people will talk people all the way through the process. Even if you don't buy from us and you want to become educated, we're here to help. We put, you know, hundreds of pages of content out there from an FAQ standpoint on OneGold as an example, because we know it's confusing and we know people have a lot of questions, and we want to be transparent and answer those questions. And you can still call in or do online chat as well. I think the most important thing that any buyer needs to do is, one, decide, do you want to be in metals? Two, decide how much you want to own. And then three, figure out what product to buy. Do I buy an ETF? Do I buy digital? Do I buy physical? I want to buy physical. What's the right product for me? And any good retailer out there will educate you on the merits of each of those. I've actually done several videos, several presentations where I talk about the merits of all three levels of ownership. Do I lose a little bit of business to ETFs because people find that more convenient? I'm sure I do. But if you really truly believe in metal in hand, I walk you through what to look at for a retailer and how to make sure that you're picking the right retailer to buy from. And I think that's really, really critical. Do your homework. Figure out what you want to own. Figure out what type of metal you want to do, and then really make sure you buy it from the right partner. You want a company that's been around, who has high integrity, that offers a great experience. Read the reviews on the person you're doing business with. At Apmex, both Apmex and OneGold are 4.9s out of 5 on our surveys, and both of them have thousands and thousands of reviews. So I don't think you can go wrong doing business with us, but if you choose to do business with someone else, most importantly, make sure you know who you're getting in bed with, and that is a partner you want to do business with long term.
And just by the way, Kenneth, if they call, can they also discuss OneGold?
Yeah, we have a separate phone number for OneGold.
Mm-hmm.
We can absolutely walk you through that. Got a couple of guys, and that's smaller businesses, you know. Got a couple of guys there that are very available. Again, read our reviews. You'll find when it comes to asking questions and getting answers,
Mm-hmm.
you're not going to find a better company than us. And like I said, even if you don't do business with us, give us a call. We'll educate you. We'll walk you through the merits of it. And then we'd love to earn your business if we can.
Kenneth Lewis, thank you very much. Apmex.com, and I really appreciate OneGold.com for the one.
Yes, it is. Yep.
Okay,
Yes, it is.
perfect. Very easy to remember. Thank you very much, sir.
All right. Thanks, buddy. Take your time.